Hello and welcome. In this video, we will learn about special type of candlestick known as Doji. Okay. Now on your screen, what you are looking at are various Doji candlesticks. This is a Doji. This is a Doji. This is a Doji. This are also Doji candlesticks. Alright. Now, if you recall the parts of a candlestick, you know that there are four parts. First is the open, then high, then low, and then close. Correct? Open, high, low, and close. These four things constitutes a candle. But here we do not have a body in a candlestick. This is a candlestick, alright? But here the thing is that the opening price and the closing price are the same, and so there is no body in the candlestick. And if you do not have a body in a candlestick, it will be called as a doji. Okay. Now see here, this is the opening price. The price opened here. The price went up, it came down, it went back up again, and it closed here. So the opening price and the closing price are the same here. Same is the case here too. Let me take a value. Let us say that the price opened at 20 rupees. So price opened at 20 rupees. The buyers took the price up till 25. But then the sellers came and brought the price till 15. And at this point, once again buyers came, took the price up, and were able to close it at 20 rupees. Okay. So the price opened at 20, closed at 20, and so there is no body. Same is the case here. Price opened here, went up, came back again, closed here. Price opened here, went down, came back up, closed here. Price opened here, went up, came down, went up, closed here. Price opened here, went up, came down, went up, closed here. Okay. So the opening price and the closing price are the same in a doji. Now, this holds good for all the time frames. Okay. Now this can be valid for a 1 minute candle or 5 minute candle or 1 day candle, 1 week candle or 1 month candle. If it is a 1 day candle, then the price opened at this level in the morning, went up, came down, went up, and by the time market closed, it closed at the same point. If it is a week's candle, then in the beginning of the week, the price opened here, went up, came down, went up throughout the week, and by the end of the week, the price closed here. Okay. So the timing or the time frame doesn't matter here. This holds good for this holds good for all the time frames. Okay. Now, this is a doji. This is also a doji. This is also a doji. But then the meaning of this and this are different. This is a doji. This is also a doji. But the meaning of this and this is different. Meaning, even though all the candlesticks that you are looking at are dojis, they give different meanings. Okay. So let us take each one and try to understand the meaning that they are trying to convey. Alright. Starting with first one, which is normal doji. Okay, doji. Now here, these two are the perfect dojis because you don't have a body here. The opening price and the closing price are the same. But these two are also considered as dojis because we have wicks of same length on both sides, correct, along with a small body. Even though these two have bodies, they are considered to be dojis. Okay, and here in this candle, this is lower wick, this is upper wick, this is upper wick, this is lower wick. And if you have the opening and closing price at the middle, then it represents indecision. And if you have the opening price and closing price at the middle, then it is called as a normal doji. Okay. Now what is this indecision? This indecision meaning the buyers and sellers are of same strength. Okay. Here the price opened, the buyers took the price up, sellers pushed it down, buyers pushed it back up and closed it again, meaning both the buyers and the sellers are of same strength. And when that happens, we get a doji because both buyers and sellers are not sure of their next move. Buyer thinks that he can take the price up, but seller will bring it down. Seller thinks that he can take the price down, but buyer will push it back up. And when both are of same strength, we get doji. Okay. Now we do not take a new trade based on doji. We exit from an existing trade if we get a doji. Okay. If you have an uptrend and if a doji forms at the end of the uptrend, then it means that the uptrend is coming to an end. Okay, meaning the trend can reverse or it can go sideways. That is what the doji says. If the doji comes after a downtrend, then it means that the prior trend, which was the downtrend, is coming to a halt and now the trend may reverse or it may go sideways. That is what the doji tells us. Okay? Yes. Now let me show you few charts and explain you the concepts. This was an uptrend and at the top we have a doji. Now this is not a perfect doji because we have small body here. Okay, small body, and it is a red colored body, meaning it says that there is a slight selling pressure, meaning slightly the sellers are more powerful than the buyers. Okay. Now this doji is telling us that the prior trend, which is the uptrend, is coming to an end. It might not be the end. The trend may continue or it may reverse too. Okay. This is just saying that the prior trend may not continue further. If it wanted to continue further, then it would have been a green colored candle. If it was a reverse, okay, if it was reversing, then a bearish engulfing pattern or a dark cloud cover or a hammer would have formed. Okay, shooting star would have formed. But none of that happened. We just got a doji, meaning the buyers and the sellers are equally strong at this point. Okay. So let us look what happened next. So the trend reversed and the price came down. Okay, so at this point sellers came in and took the price down. All right, that is one thing that the doji tells us. Next, price was moving up, we get a doji, and this is a perfect doji, I can say, or it has a small green body, okay, a plus symbol. This doji says that the prior trend, which was the uptrend, is ending, and next the trend may reverse or it may go sideways. That is what it is saying. Okay, we do not enter a trade here. If we had entered here, we exit by looking at the doji. Okay, now what has happened here? The price has gone down. Okay, next, Bajaj Auto, the price was moving up and we have a perfect doji here, and after this the price came down. Okay, so this is how doji tells us that the trend is changing. Now look here at this. Do you recognize this pattern? We have an uptrend, we have a long green body, we have a small bodied candle here, and then we have a strong red candle closing below the midpoint of the green candle. Can you recognize this? We have learnt about morning star and evening star, right? So it is enough if you are able to recognize this. You don't have to know it by name. Okay, but that has happened here. All right, so this doji is a part of the previous pattern that we had learnt, and this is telling us that the trend is going to reverse. So you can use doji as a standalone pattern or candle, or you can combine like this and use it for trading. Okay, now remember that you won't get a perfect morning star or a perfect evening star everywhere. Okay, you will have to adjust with the pattern. You have to see whether the pattern looks almost similar to the patterns that you have learnt, and if yes, then you have to take chance and take the trades. Okay, yes. Next, we have a downtrend and we have a doji. This is a perfect doji, no real body, and this makes the price go up. Okay, and once again, you have a red candle, you have a small bodied candle, or here there is no body at all, and you have a green candle closing above the midpoint of this. So this is one pattern that we have learnt, correct? And this is signifying that the price is going up in the future. Okay, next, price was coming down. You have a doji here, doji. This signifies that the trend will change or it will go sideways. And what has happened next? The price has gone sideways, okay, till here. Then of course it continued, but from here till here, this is day chart. So for almost 3 weeks, the price went sideways. All right? Yes. So this is how you can use candlesticks. Now, if you look here, this is also a doji. If you look here, this is also a doji. If you had taken a trade here, you could have exited here or here. Okay? For doji to be more powerful, you can go back and see if there is any support back. Okay? If there was any support here, then this would have been stronger. If there was no support, then you can assume that it is insignificant doji. Okay, Now dojis can appear anywhere. Alright, it can appear in the middle of an uptrend or in the middle of a downtrend or in the middle of a sideways movement. Okay, all those dojis should be ignored. You have to consider dojis which come after significant uptrend or downtrend, and you have to see whether the doji is appearing at a support or a resistance. If it appears at a support or a resistance, then it is more powerful. So if here back there is no support, then this is insignificant. Going down, if there is no support here, this is insignificant. And by looking at this, we can come to know that there was some major support here. Okay, yes. So this is about normal doji. Next is dragonfly doji, which looks like this. Okay, this is a perfect dragonfly doji, but you will get something like this too in the market. Okay, now you have to treat these two just the way you treated these. All right, so we have learnt about these candlestick patterns, correct? How would you treat them? Treat these two in the exact same way, because these two are saying the exact same thing that these candlesticks are saying. Okay, now if this had formed in a downtrend, meaning at the end of a downtrend, then this would signify that the price will go up, correct? If there was an uptrend and this had formed at the end of an uptrend, then it would signify that the price would go down. Same is the case here and here. Okay, now see, try to understand what has happened here. The price opened here, went up, came down till here, but then the buyers were strong enough to push the price back up and close it here. This signifies a buying pressure. Okay, this signifies a buying pressure. Same is the case here and here. The price opened here. The price went down till here. At this point, buyers came and took the price up, and they closed it here. Meaning, this signifies buying pressure. Okay, so if it forms at the end of a downtrend, then it says that, or it is saying that the price will go up from there. Okay, so in simple words, treat these two just the way you would treat these. Okay, and this is called as dragonfly doji, and you don't have to remember this name. Okay, let me show you a chart. Price was coming down and you have a dragonfly doji. Of course, this is not a perfect dragonfly doji, because a perfect would be on the top. Okay, the body on the top or the line on the top, opening price on the top. This is not a perfect dragonfly doji, but this is a valid one. Okay, so after a downtrend it has come, meaning the buyers have come and have taken the price up. So which means that the selling has ended and now the price may reverse or go sideways. Okay, so that is what this is signifying, and accordingly the price has gone up. Okay, now if you look at these three candlesticks, does it resemble to any of the pattern that we have learned? Yes, correct. So we have learnt about morning stars and evening stars. You have a red candle, you have a small bodied second candle, and you have a strong green candle, and the green candle is closing above the midpoint of the red candle. So this is one of the pattern that we had learnt, and this is a bullish reversal pattern, correct? So you can use this as a standalone pattern, or you can consider this and trade and take a trade and earn some profit. Okay, so this is about dragonfly doji. Next is gravestone doji. This is a gravestone doji. This is a variation of gravestone doji. Now you have to treat these two just the way you would treat these. Okay, I won't explain in detail because you already know about these, correct? So the long upper wick represents selling pressure, and same is the case here. The price opened here, it went up, but then at this point the sellers came in and pushed the price down. Okay, the closing price was also the same. The sellers displayed a huge power here, meaning selling pressure is being displayed in this pattern. And so if this pattern appears at the end of an uptrend, then it signifies that the price will either move down or go sideways. Okay, and this is called as gravestone doji, but you don't have to remember the name. Okay, just remember this and this. Okay, these two looks same, correct? Here you have a small body, here there is no body, that's all, right? Yes. So let me show you a graph or a chart. So you have an uptrend, and at the top you have a gravestone doji. Okay, you have very long wick and a very small body. This is not a perfect gravestone doji, because in a perfect gravestone doji the body would be here and there would be no body. Okay, in reality the opening price and closing price would be the same, but here it is not so. You have small lower wick and a big upper wick. Okay, but we consider it to be a gravestone doji because the length of the upper wick is much more than the length of the lower wick. Okay, so this is signifying that this uptrend has come to an end, and next the price will either move to the side or to the down, and down it has moved to. Okay, so this is how doji tells us that a prior trend is coming to an end. Okay, now if you look here you have a doji, if you look here you have a doji, but this doji is appearing in the middle of a sideways trend. It is neither appearing at the bottom of a downtrend or at the top of an uptrend. So these two are insignificant dojis. Okay, and we should ignore these two. All right.